We'll soon find out whether Europe may consider more stimulus measures to pump up its economy. The ECB Governing Council holds a news briefing Thursday after several days of talks. Jasper Lawler, market analyst with CMC Markets, joins me now from London. Jasper, are you expecting any sort of announcements, surprise announcements from ECB President Mario Draghi?
Hi, Rhonda. I'm not, to be quite frank. I think they have a few different options as to what they could announce. They could extend the duration of the program, but we've got 10 months left, so it would seem a little bit premature to do that. They could obviously increase the size of the program. Overall, I tend to think that there's only so much buying that they can do. The European bond market is smaller than that of the US. I think they risk crowding out the rest of the market if they increase the size of the program too much. Probably something that's not been spoken about too much is that they could change what they're buying. So at the moment it's mostly treasuries, some corporate bonds, public corporate bonds. They could extend it to more just broadly corporate bonds. As they go again, the European corporate bond market is smaller. So anything they do in terms of changing the number of assets, I think would more just be a sort of token gesture. The one thing that really would kick things off to the races if they announced buying outright equities, something like the Bank of Japan did. That would really send markets flying, but I think that's a pretty outside chance.
Is it too soon to know how much QE has even helped the markets in Europe? Do you need a few more months to sort that out?
Well, I think so. One thing that leads me to think that probably they're not going to act is that we did just get some credit data from Europe, and there are signs that credit is loosening. Banks are starting to loan a bit more, not so much to individuals, but certainly to corporations and companies. And so that is debatably to do with the ECB policy, but nonetheless, that's a positive sign for the economy. And probably it's something that Mario Draghi is going to mention in his press conference and say that, well, we want to see a few more months of this. And as a sign that the QE policy is working. Obviously, it initially inflated asset prices, but some of the issues in global markets have sort of sent some of the European equities especially back down towards where they started even before the QE program was announced. So really the main effect that we're looking at is the euro. And that probably is one of the main reasons that they would be tempted to expand the policy, is because we have seen a bit of a bounce on the euro recently. It's at about a floor around sort of the 113 area against the dollar. I think if they don't announce anything, maybe the dovish rhetoric will take the euro lower temporarily, but then I think we could be looking at a spike in the euro thereafter, and maybe come the next meeting, then there's a bit more chance purely on that euro move.
So what happens with equity markets between now and then? Do they rise on speculation?
Well, I guess it largely depends on what the ECB speakers say. The speculation ramped up a lot this time after what was said by Novotny. He's largely backtracked on that since. And so I think if policymakers start to think that maybe the rise in the euro, inflation dips again, because obviously we've seen deflation again in the eurozone. If that starts to be a reason that the policymakers think there's justification for it and they start hinting at it, that speculation could drive markets higher. But obviously it's all interconnected, and we obviously have the Federal Reserve next week as well. And so whether the Federal Reserve decide to go in October will also translate across to European equities.
Jasper Lawler, market analyst with CMC Markets. Thanks so much. I'm Rhonda Schaffler for The Street.